What's up, peeps? And yeah, you know, whenever IPO come out, my last person actually drop my video. But I'm off to do my due diligence. You see me? So in this video, we'll be reviewing the One Great Studio IPO. We'll be glancing at its history, how it makes money, why it's coming to the market, of course, dividend policy, and the financials as well. I have a list of stuff I want to go through in more detail to the end of the video. So there's that. And I'm going to also make some comments, both good and bad, about the business model itself. So if any are interested you, stick around. Don't forget to like, share, comment, subscribe to a friend. And of course, you know that this is financial advice. They own due diligence, as I always preach. But yeah, but that's it. Let's begin. Alright, so about the company. One Great Studio is a digital agency that has been around for a little bit over 10 years. The company describes itself as a digital first agency, which focuses on using marketing assets to drive profits. The company describes itself as a digital agency, which focuses on using digital assets to drive profits and purpose. I think that's pretty straightforward, but if you don't understand, it means using the assets that you would have on your balance sheet that are predominantly amortized rather than depreciated. I mean, just say that now, may as even understand the first part. Oh, you don't understand that. Anyways, in a more simple form, is more of using intangible assets, things that you can't touch, such as websites and social media, to generate profits for its customers, which at the end increases, customers' click-through rate, which is essentially profits for them at the end of the day. So their customers make money, they make money. So basically, in their words, they said that their aim is to help business generate leads, which helps them to generate more sales through the digital marketing services that they provide. Alright, so something that really stood out to me was that the CEO, Dwayne Brownie, sorry if I butcher your name, but so the CEO, he has an education in psychology, computer science, and business management. And I feel like psychology is one of those subjects that persons tend to neglect when it comes to sales, because if you can understand how people think and how people will spend their money based on a series of events, then you can position yourself to be that person that they'll take sales from or they'll do sales overall with. So yeah, I think that was really cool, especially that part. He has other accolades, but yeah, that part stood out to me. On the website, the company has a podcast with I think about 3 episodes so far. I was listening to them, and in the first episode, essentially just spoke about how One Great Studio came to be, essentially, and the other two essentially just discuss how entrepreneurship and digital marketing has helped essentially foster the growth and structure of One Great Studio for the last 10 years. Say, I know they're at the market, and what essentially do they want the money for? So I'm just going to give a brief summary of the IPO. So essentially, it discusses the business, which I already explained, web design, search engine optimization, mobile apps, we'll talk about that a little bit more. The shares are offering are ordinary shares at $1 each, essentially, and the amount of money they are after is essentially $339 million, inclusive of about $170 million being reserved already. So the use of the proceeds essentially takes into consideration the expenses that are allocated with just coming on the market, so listing expenses, etc. And then another 3 now are to reduce debt owed by Berita, strategic growth initiatives, and development of human capital, which we will speak a little bit more going down. I'll say 152,382 will be reserved for their key strategic partners at $1, and in one GS team also gets about $16 million that they can participate in. So there's that. And do note that the minimum amount you can actually buy is $10,000. So $10,000 basically. So for $10,000 you get 10,000 shares if you are lucky. Say. And the reason I'm saying if you are lucky, because it's been a while since the IPO market has, risen. I think we have been hungry. So yeah, we'll see. So now into the actual figures as to what is allocated. So essentially, debt reduction will be about $220,620 27,000 mash. Essentially, listing expenses is not going to exceed $30 million, and we've seen that as being the norm going forward. So this one too. So the strategic initiative, which is $58 million, is to develop new product lines of business and fund regional and international expansion. And then the development of human capital is to build marketing and business development capabilities while increasing the operational and production capacity of the company to meet the demand, and that's about another $30 million. So yeah, essentially 250 million of the money raised is Forex, just clear up debt essentially and obligations, and then the other 88 is to use actual stuff to like help push the company, and that's fine because they took on was also for their acquisition, which we'll talk about a little bit more. But essentially, when we go to the financials, you'll see where I explain stuff more. However, what I can say is that as relates to development of human capital, essentially what their aim is to increase their marketing and sales efforts by onboarding, dedicating sales and business development team members to execute targeted campaigns. So basically, get more persons or get the training for the persons that are already existing there to essentially help them be more known. Yeah. Alright, so the products and customers, as you seen on IPO, there's not really much else we can say. But essentially, they do web design and development. They have SEO, which is search engine optimization, where they did the acquisition of that company. It's a US company, high voltage SEO. Which essentially, if you know what SEO means, it is search engine optimization. Means basically when you go up on Google and you type in Gargant, the SEO aim is to literally make your name be at the top, essentially. It means Gargant, the YouTuber. Yeah, that's the aim. And Google helps, but when you have a SEO dedicated to driving that, then you know things like you have a higher chance of click through, because a lot of persons don't even know that Google have thousands of pages going back. If it's not on the first page, we're going to try something else. So that is what SEO does. The faster, the higher it is whenever you do a search, it's better for whatever. So I think I'm going to try Barita while I talk over this and see if the SEO really working. So yeah. And they did this acquisition in the year 2022. So there's that. They also do mobile app design and development, brand development, digital marketing, and e-commerce. Alright, so they have 117 customers to date in 2022. Alright, some of those customers are Ted Green, Barita, Ari Williams, Beryllium, which is no conveniently named Guardsman and Beryllium. So there's that. Canopy, E-Med Spa, PIOJ, which everybody's supposed to know that, and Cornerstone, among others. But fun fact, Cornerstone owns about 74.5% of Berita. So yeah, just that. I just looked at Berita financial statement to see. Say, alright, so based on the corporate structure, they have two significant acquisitions, or two assets under the belt essentially. So one, we just talk about high voltage SEO, which is the search engine optimization thing, and then you have Snappy, which essentially is just a payment gateway, so you can like make purchases online. And then they have One Great Studio LLC, which is a limited liability company. So yeah, now on to the dividends, and probably elaborate more on the dividend, but essentially they say that their dividend policy would be 30% of net profit that could be available for distribution. It means so 30% of the net profit, and when we go for financial, we can explore how much you potentially are gonna get. So there is that. And they're saying that in December, so it look like it's a December company will pay dividends. What if they'll pay dividends this December coming? Wait, so basically December 2021, they said that they paid basically $484 per share, which is about 20% of roughly 21%. So 20.82% of their net profit reported for that financial year. And then in December 2022, they paid 385, which was a representation of 30% of their net profit. So if December, I'm just saying it's not related to it, but if a certain toll road pays in October, November, and then this pays in December, all them dividend funds, yeah. But yeah, so yeah, it's a good look. We just hope they make a lot of money so they can share the profit. So yeah. Anyways, we're going to go to the financials. So in the financials, we're going to DuPont, we're going to do projections based on what they did. They said their projections would be, and also me using Kagar and then stress testing that. We're also going to use ratios, and then we're going to the board members, and then we're just going kind of explore the debt side of the situation in addition to exploring the dividends. So there is that. And then of course, I'll make my comments as well. I'll just put in a like nice like a table for sure. Alright, good, bad, and indifferent. Alright, for me. So before we even start like going in financial, I did want to show you guys like how they had broken up their business as to what's making the most money. And as you can see, SEO, though recent, give or take, they probably had something working before, but though recent, it has taken up a significant portion in the short duration. It has been around basically. Also, web design and app development is also the second biggest one. All the others are things like brand creativity and digital strategy and marketing would also like include like making content and so on and so forth. So basically them 2 year would have been alright, but just showing you this right off the bat. And apparently they are in several sections of the world. So there is that. Alright, so as it relates to directors, director is John Bailey. Yeah, you guys probably supposed to read even the mirror and understand. So yeah, he's a prominent business leader dedicated to Jamaican development, leveraging over 30 years of experience in finance, manufacturing, real estate development, tourism, and hospitality. Holds a degree in business administrator, majoring in finance from University of South Florida, so on and so forth. Then the board director, the CEO, Mr. Brownie. Oh my, yeah. And then the COO, which is Gina Delisier. So yeah, these you can like go on the prospectus and read. Other board directors, yeah, personally I don't know much about them, so can't say much regardless. None. So Miss Raquel Brownie is non-executive director. But yeah, there is that's the directors. I'm taking a look on financials and like go through it if you guys want to read, or I'll just pause it here so you guys can see it and so on and so forth. So yeah, now to the financials. Want to run through this quick. Alright, so the recap, this is like the 5 year that they gave recap from 2018 to 2022, give or take. I did do the Kagar and it came to 82. Well, each of them have their respective Kagar, so I'll just leave it as is so you can see. With Kagar is just like the year by year growth rate I would have to go, assuming that all profits are reinvested in order for it to move from this to this, basically. So essentially, it's just the financials that they provided, and I just did the calculations for the Kagar and in the ratios, which I guess the gross profit margin is high. Not gonna lie, it's really high. Which is good, but then that just means that the cost of good sold is also high, guys. Roughly like 50, give or take 50% on average. So yeah, operating expense is different, but I'll show you some. So operating expense is still crazy as it's been growing. Cause all right, so their income, as you can see, even though it's not that significant, you'll see that the income, as in like how much money they earn, or how much they would have to earn each year to reach this, is a little bit lower than the expenses, meaning that the expense is that like the cost of goods sold essentially is a little bit like you have to, it costs more basically. It costs more than actual income, give or take. Meaning say like what put this now. Basically say I say that you have to have a 82% increase year by year to reach this figure, and in this now you have about 83%. Means say the expense growth is bigger than the revenue growth, which if it continues long after, it'll probably be an issue. But we need to do DuPont, and I like to do DuPont because well it get like a visual representation of what is going on. As you can see, the company, the red line is the leverage. Red line is the leverage right here. So the red line, which is this, is the leverage, and you can see that it was significant in 2018. Means they were using a lot of leverage to like facilitate the business, and then it has like reasonably trickled down year over year. And I assume that if they, well, when you look on, we're going to look at it, but whenever you look, like probably next year, it's supposed to drop because they're going to pay a big chunk of it though to bury it up. And you'll see why, even though it seems like them really had no growth, it's better reduce the expenses than actually even a horrible growth and them something there first say. And rest of them really return on asset has increased, well was increased, but it kind of dipped like a bit in a 20. Everything essentially dipped. Return on equity dipped as well, and profit margin, which you have probably on this right here, so to kind of see profit margin, to see the margin that like they're working with. But again, 2018 was rough, 2019 rough, and then they have been increased in 2020, increased in 2021, but then they have dipped a little bit in 2022. All right, essentially I did do the projections because what I did for the next 4 years. So CAGR, even on their thing they have that they project, sorry, so 20% is the projection they think going into the future going have, which is fine and reasonable. But there's always a lot of stuff that can happen and will happen. So based on their revenue, it's them of 538, yeah. Alright. And I did do the assuming the same CAGR going into 2023 at the end of 2023. So I'm saying based on all of this information that you have given and based on the trajectory, I just put it here. So for basically like gauge what would be the future revenue. We can revisit this party at a later date. Alright, so and then going back to here, so they did show they were talking about the growth. So basically they're saying they're projecting a 20.24 CAGR over the next 3 or 4 years, give or take. And so alright, cool, getting benefit of doubt, I'm just drop it a little bit and then just show the growth as it would happen for the next. So 2024 then probably reach $500 million, and then 2025 go over it and rate it. Even though granted, if it's supposed to drag this come over, which you can because Excel and model formulas them, if you drag it over, you can see what figure they would actually be at like 2027, which I feel is reasonable because business model. But I'm gonna say all these predictions are just projections and numbers, and anything, there's all other variables that come with projection. So there's that. Say, but there's one thing I wanted to show though, because even though it has not yet, but you can see where the investment in the SEO has actually helped a bit. So basically what I did, I had used the year by year, the recent financial they gave me, and then I used the quarter. using the quarter meaning where they are as of right now. So this is the year by year, which shows how much they have grown compared to the previous year. But that's not really what I really care about, because it's the same issue. You see where they have like their revenue is growing, yes, but the expenses just ever so shy of beating it out. So the expenses is growing more, meaning they're essentially getting less efficient. Yeah, but and that was from 2020, 2022 and 2021. But now the quarter that came, and when you look at it, so these the year by year. So year by year, so compare 2022 to 2021, like essentially it's 25%, give or take, more that the cost has been going up. Is it me say just marginally go up 25%, but in Q1 it fell to 13, which means them technically have become more efficient. I don't know if it's the machine or the SEO that they have that is producing more, so it help balance out all the other inefficiencies in the company, but it's just an be a good look at to say. Alright, that is that. Alright, so the debt now, the debt, which is the biggest thing they say they're going use the money to pay. And these are all the debts that they have, basically. So NCB, there are several loans from NCB amounting to about $25 million, $26 million, give or take, at various interest rates and various tenures. So I just did a calculation and I used my amortization schedule that I learned from Finman, which was year before last, basically. And I just did the calculation. Essentially, this just shows, I can show you guys. Essentially, it's just a big calculator that calculates loans and duration of loans and so on and so forth. So basically now, all these loans, it's good that they're paying off very which is a lot, because these would be all the total interest payment that they would have to do for NTB. So 1.9, 1.5, 2.3 million. But then this would be the interest you'll be paying to Berita, which is a lot of money for you pay in an interest based on the tenure. So when they came to the market, what they would be doing is essentially paying Berita a good chunk of paying off a good chunk of the loan here, is it me? And basically them to have all them loan here same way. And these loans are way back. Just say I just show you something debtness. Alright, so these are the debts that they have. You can pause through the century, but you notice that some of them are 2028, so some of the years them have already gone, or them already start paying most of these already. Is it mean them have 3 years on the loan here, which they have 3 years on the $16 million loan, which is 48 months. 3 years left from the $16 million. So basically I have 3 years left, give or take, from the 4. So I just did do the whole tenure for like see how much they'll be paying in interest. A 1 year 102, it's about 8.5 months. Is it mean? And them really only have like 4 left out of the 8 years. So they've been paying off those debts for a minute now. This is the big boy, which I think this probably recent in 2022. So probably have like a year, or they probably have like 3 years or so pay. But if they can, it'll be good, because this is the amount, $48 million you would have to literally pay back Berita. It means just interest alone. So you can pay it off fine. All the money there now, you don't have to worry about how much you have to pay, because you can do the calculation right in front of you. Say the 270 mil, or at an 8% interest rate paid quarterly, and it's 4 years essentially, like quarter. So basically they'll be paying $19 million, which is a lot of strain on a company for pay. So basically every year, when you check it out, every year they would be essentially just paying for 70, almost $88 million every year in just interest payment. So you better just do it for do and just get it out that way and done. basically. So yeah, so that essentially is a good move. Basically, what happened now is that they would essentially just have $8 million in interest paying to Verita for the 4 year, which is a much more reasonable payout year time. So yeah, not 8 million per year, that's in interest. So yeah, 4 years just bust out enough for basically and see how much that pay per year. So 14 per year compared to paying 80 per year is a big reduction for them and is a good thing. So there is that. So my last comment is, well, competition. I just did a Google search and just say, alright, SEO businesses, and there's several. You have digital first media, you have smart site, you have Uplift, you have mobile, I have Joseph Studios. All in all these are competitors, and because their business model is not like stuck geographically, as long as the company have like a website or connected to the internet, they can use these other competition services. So there is that. However, the SEO business has proved to be very good for them, and they have been are actually been becoming much more efficient, give or take, as I was saying in the financial group here. So they have been becoming more efficient. As you can see, we just over see what the year play out with like a full year of the SEO. And yeah, so all in all, to me, I'm saying not advice, but if is a R company. So R company will be here for me. It's just that artificial intelligence is ramping, and it might rough out there. But not lie, it might rough, because then if companies can get the same service at a faster and cheaper rate, they're going to jump ship, even though they have a lot of recurring contracts, and whenever you do something for the year, so the company have to pay maintenance to maintain the website or so on and so forth. So they'll have the recurring money coming in, which is good. At the end of the day, we say after the contract end, however, they can switch or them can jump ship for a cheap alternative. So that's just the 2 cents. Say. And well, that is it, guys. Thank you for watching. If you're there to the end, just comment one GS. Say. As always, guys, love you and catch you in the next video.